Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I want to provide an update on my Robinhood portfolio. Currently I'm at $341,000, cash position of $34,722. I also have another $30,000 in a high yield savings account, so I can easily deploy into the market when there are opportunities to buy. Most of my portfolio is in US equities, and the market has been extremely optimistic, even with all the uncertainty. Scrolling down a bit, taking a look at my portfolio, my largest position is VOO, Vanguard S&P 500 ETF, which tracks 500 largest US companies. And I figure since you can't beat the market consistently, might as well have a piece of it. So this makes up 16.48% portfolio, or $50,555. Total return of 29%, which is great. Next is VGT, Vanguard Information Technology ETF, which tracks some of the largest tech companies in the US. This makes up 7.15% portfolio, or $21,919. Currently up 139% on this position. Next is Schwab Large Cap ETF, which is very similar to VOO ETF. This makes up 4.51% portfolio, or $13,830. Total return of 45%. Largest stock position is Apple, ticker symbol AAPL. Majority of their revenue is consumer electronics, and they're growing their services and wearables business. And I see Apple growing in the long term as people switch to 5G devices, and Warren Buffett has a large position in Apple. This makes up 9% of my portfolio, or $27,610. Currently up 209% on this position. Next is Nvidia, which is a GPU company. This makes up 6.17% portfolio, or $18,933. I'm up 181%. So I think Nvidia has a lot of potential upside because there's a big demand for GPUs, as its demand is greater than CPUs for personal computers. And as people use it more for their autonomous driving, as well as their data center business, that segment of NVIDIA is growing rapidly. And there's more use cases like VR, AR, virtual reality. So a lot of usage for visual computation and high processing computing. So NVIDIA has a lot of potential upside. Alibaba, which is the kind of like Amazon, but in China. So they have e-commerce as well as web services. This makes up 5.46% portfolio, or $16,746. I'm up 72% on this position. So I think Alibaba has a lot of potential upside as well, because they will, I think e-commerce is going to be the new normal. So more and more people are going to go contactless, so Alibaba will benefit from that. Microsoft, which is a lot of, they provide enterprise solutions, and their Azure cloud computing is growing rapidly. This makes up 5.36% portfolio, or $16,447. I'm up 159%. Amazon, which provides e-commerce as well as Amazon Web Services, cloud computing. This makes up 4.44% portfolio, or $13,608. I'm at 186%. Next is Visa, which is a big payment processing company. Their VisaNet network is very strong domestically and internationally. This makes up 4.22% of my portfolio, or $12,952. I'm up 95%. Next is Alphabet Class A shares. Majority of the revenue is from online advertisements. And even though people or companies are spending less on marketing and advertisement dollars, but I think when things pick back up, then people will spend more on Google ads. This makes up 2.14% portfolio, or $6,557. I'm up 59%. Next is Alphabet Class C shares. This one does not have voting rights. Makes up 1.61% portfolio, or $4,933. I'm up 65%. Next is Tencent. This makes up 3.55% portfolio, or $10,899. I'm up 61%. So some of the business segments include financial services, social media, gaming. A lot of these are high in demand during these times. Facebook, majority of the revenue is online ads. Some of their products include Instagram, Facebook, WhatsApp, and Oculus Rift virtual reality. So a lot of people, they have a big user base and they continue to steadily increase that user base. So as they pull different levers to monetize on their business, I think Facebook has a lot of growth potential. This makes up 3.26% portfolio, or $9,990, 76%. Next is Johnson & Johnson, which is a healthcare company big in pharmaceuticals, medical devices, and consumer. This makes up 2.9% portfolio, or $8,898, up 18%. McDonald's, which is one of the largest restaurant chains, this makes up 2.1% portfolio, or $6,453, up 34%. So McDonald's, they pay a steady dividend, and I will continue to hold this stock. United Health makes up 1.95% portfolio, or $5,973, up 81%. So they're one of the largest insurance payers. Boeing makes up 1.72% portfolio, or $5,274. I'm down 22% on this position. So even though I'm down on this position, I plan to continue holding long term because I think Boeing has a duopoly with Airbus. So once things pick back up, then Boeing will benefit. But I think this will be a very long-term play, so that's why I'm holding long-term. Home Depot, which is in the home improvement space, makes up 1.68% portfolio, or $5,153. I'm up 88%. Next is PayPal, which is big in payment processing. This makes up 1.6% portfolio, or $4,910. I'm up 167%. So as things go contactless, I think PayPal will continue to benefit from online transactions as well as contactless payments, point of service devices. AT&T, which is a telecom provider, and I see a lot of growth potential from their streaming service, HBO Max. This makes up 1.55% portfolio, or $4,745, down 14%. And AT&T pays a pretty steady dividend yield. I believe it's almost 7%. So it's a great dividend stock. Next is Costco, which is in the membership warehousing retail space. Makes up 1.48% portfolio, or $4,534. I'm up 45% on this position. Next is Berkshire Hathaway. This is Warren Buffett's company. This makes up 1.28% portfolio, or $3,933. I'm up 18%. So Berkshire Hathaway, they have exposure to Apple as well as some big banks and other partially owned companies. And I see this being a long-term position to hold. They don't pay a dividend yield because Warren Buffett doesn't believe in paying short-term dividend yields. They'd rather reinvest that into the company for long-term growth. 3M, which is another dividend stock. This makes up 1.08% portfolio, or $3,313. I'm down 14.66% on this position. And 3M is a dividend aristocrat, and I plan to continue holding them long term. Next is PepsiCo, which is a beverage and snacks company. Makes up 1.05% portfolio, or $3,218. I'm up 18% on this position. Next is Baozun, which is the Shopify of China. This makes up 0.86% portfolio, or $2,634, up 19.1%. Next to our energy is a alternative energy company, makes up 0.82% portfolio or $2,515. I'm up 59% on this position. Taiwan Semiconductor Manufacturing Company. So as companies or semiconductor companies like Intel and other chip companies outsource their manufacturing to TSM, TSM will definitely benefit from that. So this makes up 0.81% portfolio or $2,495. I'm up 79% on this position. Next is Cisco, which is a networking solutions company. Makes up 0.74% of my portfolio or $2,277, down 0.22%. Disney, which is an entertainment and parks company. I see a lot of growth in their streaming platform for Disney Plus, as well as Hulu and ESPN, but more so Disney Plus. And they also have a new business model in addition to the monthly recurring subscription fee. They're also having a premium access to content like Mulan, like newly released content before other subscribers. This makes up 0.66% portfolio or $2,031. I'm up 32% on this position. Next is Activision Blizzard, which is one of the largest video game producers. This makes up 0.65% portfolio or $1,999. I'm up 26%. Next is the Trade Desk, which is big in programmatic advertisements. So it makes ads outside of Google and Facebook on other platforms. This makes up 0.32% portfolio or $971. I'm up 66%. Next is Baidu, which is the Google of China. Makes up 0.46% portfolio or $1,416, down 30%. Next is Constellation Brands, which is big in beer, wine, and spirits. Makes up 0.18% portfolio or $556, down 16%. Next is ICHI, which is kind of like the Netflix of China. This makes up 0.14% portfolio or $423. I'm down 30%. Next is Vanguard Value ETF. Scrolling down a bit, makes up 0.57% portfolio or $1,750, up 19%. Vanguard Consumer Discretion ETF makes up 0.88% portfolio or $2,702, up 98%. Vanguard Healthcare ETF makes up 0.61% portfolio or $1,859, up 59%. Vanguard Industrials ETF makes up 0.44% portfolio or $1,336. I'm up 22%. Going back to my portfolio. So that's all my Robinhood portfolio. I plan to continue holding these stocks and ETFs and buying more stocks, preferably a good balance between dividend paying stocks and growth stocks. Also plan on increasing my cash position, currently at $34,702 and another $30,000 in a high yield savings account, so I can easily buy when there are opportunities to buy. That's all for this video. What are your thoughts on this portfolio and what's in your portfolio? Comment down below. I'm going to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.